Good morning. It is May the 17th, 2016. Time to kick off another trading day. The E-mini had a strong day yesterday. It was up, the Dow was up 169 points. The E-mini closed at 262.75, and while it's off some in the overnight, it hasn't busted yet. In response to that strength, we came into yesterday's close looking for a place to sell treasuries, and we had a 19 to 23 sell for the 10-year, and the high was 19. So our first buy yesterday coming into it was 9 to 13, and I think we might go a little bit lower. So this 8 to 12 area is going to be pretty critical to today's trading. We may not take out the 8 levels. So let's put our buy at 5 to 9 and then 29 to 01. Going to take a big rally in the E-mini. I don't think that's in the cards to get down to that second buy area. And it may take a 12 to get in. We'll put a question mark at 12. On the sell side, last rotate up stopped at 16, so selling 16s to 20s, sell 1. 23, 27, sell 2. We've got a lot of news this morning. CPI plus 0.3, that would not be good for treasuries. Core plus 0.2, not good for treasuries. Housing starts 1.130. Permits, 1.135. Permits 1.130. Permits are less than starts. That's rarely the case. I mean, a permit is just, you can dream, you can plan, you're trying to nail stuff down, you're trying to get funds to develop. And when permits are less than starts, that's usually not a bullish piece of information. Industrial production, plus 0.2 to plus 3. Econo days carrying plus 2. Capacity utilization, no one will pay any attention to, 74.9. And e-commerce plus 2.1. This number is going to become more and more important because of all the news that we see about the decline of sales at our major national retailers chains. So we've got core CPI, we've got starts, we've got industrial production, which is the major piece of news, and then e-commerce. That number could start to come into play. So this will be the first news out. That'll be the second, but the major news focus. And we'll have to see what kind of a reaction the market gives us to e-commerce. I don't know what it'll be, but it should start, given the demise and the continuing shrinkage of retail sales with the major national retailers, that e-commerce number could start to become more and more important. I know, given the choice of going to the mall and shopping or going to the internet and buying it, other than shoes, I just go to the internet and do it. I don't have to go down on, and it shows up on the front doorsteps, and pretty damn convenient. I saw where Nordstrom sales had really suffered. Macy's, they've got a lot of excuses for why Macy's went down, but when you start to see Saks and Nordstrom and the top-end stores, Tiffany's, where all the big money and people, the top 5% of the population shop, their sales starting to suffer. You can miss a recession if you got a lot of money for a couple of 3 years, but eventually it'll get to you. And while Warren Buffett bought $1 billion worth of Apple, George Soros has liquidated about a third of his stock portfolio and is loading up on gold. So they're countering each other. It looks like corporations have stopped the majority of their stock buyback programs here, at least for the moment, which leaves the Fed, the Central Bank of Japan, the Bank of Japan, the Bank of England, and the European Central Bank as the major buyers or potential buyers for stocks. So more and more people are falling out of the stock market now. Doesn't stop it from rallying, but it's just it's a market driven by traders. Okay, looking at the 30-year, we had on the buy side 12 to 16 was our first area that could support, but we had 5 to 9 is our buy area overnight, and have a low of 6. So we're going to make 5. Well, let's just make 4 to 8. Number 1 support. 01 to 29 buy 1. And then 17 to 21 buy 2. On the sell side, we've got resistance 16 to 20. Our first sell is 23 to 27. Then we're going to jump it up to 3 to 7. And I'm a little bit looser to the upside, the idea that the stock market might sell today. Low interest rates from the Fed put a floor on the market, so that's why I'm a little more aggressive on the buy side than I am on the sell side. Okay, crude options come off the board today. Crude, the futures go off on Friday the 20th. We'll be rolling to the July contract this Wednesday, 2 days before expiration. Pretty quiet overnight. Gold held in there, didn't do a lot. The buying in Europe and China was explained by the buying in the U.S. followed through buying from the United States. So we had a 70 to 72 buy yesterday afternoon. That stopped just above 70, so our buy area was good. Our sell on gold was 76 to 78, and then 80 to 82. And we made it to a number 2 sell. So number 1 support holds, number 2 sell. And that's the way our support and resistance levels work. So we're at 74. So 79 to 81, sell 1. 85, 87, sell 2. On the buy side, 70 to 72. And then 65, 67, taking advantage of this volume down here for buy 2. For those of you that can trade Europe and are very patient, can watch your trades develop over a long time, or those of you that can go to bed with trades on, with protective stops of course, our post-market work, those calls are really good most of the time. And the way you keep your hand off the mouse is to be asleep if you're on US time. Or it's the way I keep my hand off the mouse. By doing something else. We have access to so much information in the internals and the dynamics, it's easy to prematurely exit a position. Okay, we had 40 to 50 as our sell last night. That still looks pretty good, 40 to 50. And basically 75 for sell 2. On the buy side, we had 13 even, 13.10. Did not make it our buy. We'll just leave it at that. We've got a B shape. Looks like it's headed lower than 12.75 for buy 2. What is crude going to do today? Everywhere you look, the squeeze is on. Goldman was written up in a very cynical fashion. Now that corporations aren't buying their stock back, Goldman is supporting the market by writing glowing articles on crude oil. And I think the big guys have figured out it's easier to manipulate the market through crude oil than it is out there supporting equities. 48 and a quarter, sell one. 48.75, 49, sell two. And I believe if we take out the overnight session high, the next stop is 49, then I think we're headed to 50. On the buy side, I'm trying to trade lower right here. Don't know if we'll get there, so we'll make 47.50, 47 and a quarter, buy one. 46.75, 47, buy two. May have to pay up to get in. And failure to take out and hold 48 and a quarter would put me on the short side. Okay, Mondays are the big guys just come in and buy it on Monday morning and disappear for several hours on the E-mini. And I think that's what we saw yesterday. The tendency on Tuesday is consolidation, test support, but basically a trading range. So we'll play for that. Got this high right here. I have a high at 68. Stops above the overnight session. The London high are within reach. A little bit lower, so 55, 57, buy one. 50, 52, buy two. On the sell side, 64, 69, sell one. And then 74, 79, sell two. And I think we got a shot at play for stops above the overnight session high, but you got to get through 65 first, and you can see that the market, the 64, 65 area is where resistance begins. CPI plus 0.3. Core plus 0.2. Starts 1.135. Starts are projected to be higher than permits. That's unusual. Usually permits are higher. That's not good news for the housing business sector. IP plus 0.2. Capacity utilization 74.9. These are Econodatus numbers. Forex is carrying higher numbers. They're carrying 75 and plus 0.3. And then e-commerce retail sales plus 2.1. Now, if that's a year-on-year figure, that's pretty low, and I don't remember if it is a year-on-year figure growth, then that would suggest very, very modest economic growth. If it's a from the preceding month, that's a pretty healthy number. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. Be back with you as soon as possible.